What's up, guys? Bill here. Welcome back to another Watchlist walkthrough. Got a couple cool topical things to talk about today, so let's jump right into it. The first thing I want to talk about is the idea of relative strength or weakness in different stocks and sectors and things like this, because as much as I love trading SPY, it's not always the best opportunity out there, right? There's going to be periods naturally where the broader market has limited range and volume, and you're going to have to go to some, outside names to find the best setups and best moves with continuation and volume of breakouts and things like this. And today, and really the last maybe 2 weeks or so, at least the last week, if not 2 weeks, that's kind of been the case. After SPY and Qs made this big rally up, we've started to flag a lot and chop a lot here. And there just hasn't been as many great opportunities, but there's been really good opportunities in the growth sector. Think about ARK names, okay? So let's talk about that. Let's talk about how do we start to notice these changes when maybe the broader market's getting a little choppy and stagnant, but there's other sectors and industries and things like that that are starting to really pop off. And one way to, there's a lot of ways to do it, guys, from macro perspective all the way down to a 5-minute chart. So let's talk about some of the macro perspectives. You can just simply compare the last week that a stock or index has moved to each other, right? So if we go to any place, I use Tradietics, any place you can go to look at the last day, 7 days, 30 days, things like this, you'll see that in the last 7 days, ARK is up almost 8%. Let's compare that to SPY, up just under 1%. That's a pretty big difference, guys, right? So just looking at that, you can tell, okay, well, there's a lot of additional relative strength in ARK compared to maybe SPY or Qs. And I believe Qs is about the same as SPY. I don't know why it doesn't find it, but yeah, less than 1%. There's also a trick I like to use just on the daily time frame is I look at the EMAs, the 9 EMA. You can use, any lower number EMA. I like the 9 and the 20. And you can see here on Qs that the 9 EMA is starting to catch up a little bit, which is actually great for QQQ. It's a bit extended, right? And if we're going to look to get, if you're bullish and you're looking for that next leg up, these EMAs catching up would be, something to look for. But you compare that to when you look at ARK, and here's where we closed in the 9s all the way down here, right? It's way more extended. That means it's been more relatively strong, okay? You can even look on smaller time frames to look for relative strength and weakness. And one thing I like to do, and it wasn't so much of a thing today that you could tell, but I like to use the opening ranges to gauge if something is relatively strong or weak. There's a lot of times where once your opening range is set, you'll notice that maybe something, let's say it's 30 minutes into the day, is already starting to break out and confirm a breakout of its opening range. And you flip to some other charts and they're stuck in their range and they're flat and they're choppy. Using the opening range as a guide of strength, relative strength or weakness is great. Sometimes you maybe even something's at the top of its opening range, something else is at the bottom. I'm mostly talking here about like looking at the indexes, compare SPY and Qs or IWM and ARK together, but it can be any stocks, right? You might notice Tesla is breaking out of its opening range, but Nvidia or Apple's sitting at the bottom, right? That's one easy way to tell. Obviously you could just look, oh, Tesla's already up 2%, Nvidia's flat, or Apple's red. That's super obvious as well. But there's a lot of different ways to kind of talk, to identify relative strength and weakness across the market, and then build your watch list around that, because, even on a day where the broader market is green and you can make money playing most things, it's just so much easier to be playing the things that are leading. Like if we both bought calls today at the open and I bought a firm and you bought, something like, I don't know, something that had just a kind of a flatter green day, right? A firm made like a 14% move. You might have made some money. But it was probably a lot more boring day. It seemed like you're fighting an uphill battle when you could have just been trending up all day, making a bunch of money, super easy, no stress, more fun, right? So identifying these sectors and things that are stronger, super helpful. Okay. So beyond that, let's talk about some of the trades I took today. And, let's look at ARK here. ARK was obviously the main topic of my discussion today because of its relative strength lately. And yesterday, it closed a candle in the daily above this major pivot from September 12th. And what we had here was a great confluence. I really love when there's a daily pivot really close to a major gamma level. And right here at 45, we have positive GEX. Positive GEX can repel price. And so as we came up to it, it was resistance. And you can see we rejected a couple times. We couldn't quite close over, and then we broke out. So what happens when you think about magnets and repelling, and polar opposites and all this? Once you're past this 45, it should be able to help push you up. So knowing that we probably need to retest this major pivot, and now we have this great positive GEX force here in our favor, I was looking to get long on ARK on a retest of 45. And it did that basically to the cent. Off the open, 15 minutes, about 30 minutes in, we flushed down just a little bit below the daily pivot, a little bit below the opening range, and right to that 45, and that's a slap right there, guys. And once you do that, the rest of your day's set. You know, it's not always going to be this easy, but this is why I had the whole introduction about identifying relative strength. Even if you maybe didn't want to play individual tickers and you're more of an index trader, SPY, maybe not today, right? But ARK, yes. And you could have played ARK just like this instead of having to pinpoint an exact stock. Maybe you don't want to play Tesla. Maybe you don't want to play coin or whatever, even though they made great moves today. You want to play the index and kind of encapsulate all of the holdings of it. Well, here you go. And that's just a super simple day. Now you take that and you compare it with SPY. And there was money to be made on SPY. There was a big move up and a big move down. But just a lot choppier overall, right? No trend. So if you catch this move, great. You're making money, but you're ending up getting stopped out here on this pull back. And then to be fair, a lot of the moves that happened on SPY today, there was 3 big candles and they were all catalyst news driven. Okay. First, we had this 15-minute candle that was from a Fed speaker, Heller, I believe. Basically saying that rate cuts could be coming sooner than we think. Then there was another stick here that was from the first bill auction of the day. A pop up, breaking us out of this bull flag through yesterday's high. Then later in the day, there was a big sell-off on another auction. This time it was a note auction. Okay. So these have been moving the markets quite a bit. So really, you know, the news kicked off a bunch of buying and interest and took it to the top of the day. Then we sold off, sold all the way back down to the bottom on more news. And the rest of the day, it was a lot of chop and a lot of gamma pinning here around 454. You go back to ARK, right? Has relative strength. You get advantage of the whole market popping at that time on the Fed speaker, but then it's just so much easier. Yeah, there's a sell-off, there's a pop, but it's still in an uptrend, right? You never really have to exit this play if you don't want. It's respecting your EMAs. You know, it never even tests the 15-minute 20 EMA, and it just kind of grinds up all day. It never loses the 10-minute 20 EMA, which is my favorite way to follow a trend. I like the 10-minute. I use the 10-minute for my confirmation breakouts on orbs and inside days and things. And I use the 9 and 20 as my buffer and hold for trends, right? So just a good example of, yes, there's money to be made all over the place when the market's strong. But when certain sectors are hot, just how much easier your day can be. And how much more forgiving, right? You don't have to necessarily nail the entry perfect. I know we nailed that today, that 45 GEX pivot retest, But you could have played this in a couple different ways, right? And still made money because you're not eating huge volatile moves. You're not having to worry so much about it as you would on SPY. All right. Another great trade from today, and it's another great example of relative strength lately, is AFRM. And AFRM growth name, and it had the catalyst with buy now, pay later. So you had Black Friday and then Cyber Monday, and all the reports came out today showing how much of a success those sales were, and record breaking and all this. And so AFRM yesterday made a huge move, and today it made another big move. And here's how I played it, guys. I wanted to get in on its first test of 2850. That's a big GEX level, right? Let's check the daily just real quick. Here we go. We closed up over this major GEX level. I wanted a retest of it. Okay. That was my aggressive entry today, but they didn't give it to me. And that's going to happen when you're patient and when you have a plan. You don't chase and things like that. You're going to miss entries all the time because price isn't always going to do what you want it to do. So what do I do when that happens? Yes, it's frustrating, right? Look at how much of a great move it made. I wanted to get in down here. It came within 33 cents, so I didn't get it. I just sit back and wait, and I go to my next second and third best things. All right. So next best thing for me in this situation was the opening range breakout. But if you watched my video on Inside Day Masterclass, one of my execution techniques with Inside Days is called the fail and front run. Okay. And what that is when a stock has to move from one side of the range, let's say it's its inside day range in that example, to the other before even attempting to break out or break down, it's just a lot tougher, right? It's already moved so much. It's probably going to need a break. It needs a breather, right? It's probably going to fail even if it initially confirms that breakout. Okay. Same thing can be done with opening range breakout trades. You can see here that on the 5-minute, I play the 15-minute range, right? So 3 5-minute candles were set. We are opening the start of this opening range way down at the bottom, right? Right down here. Okay. And then we put in 3 straight green candles to test the top of it. Now I use confirmation on the 10. So I'm already thinking, okay, great. AFRM's bouncing. I'm kind of bummed I missed my entry. It didn't give me that 2850. But it's strong enough to get all the way back to the top of the range. And normally I would be looking at a 10-minute close and I would enter here because it didn't close too far from opening range. But in this instance, because it had already came all this way, I'm saying, all right, I'm going to be patient. I want to see a fail and a pull as near as I can get to these 10-minute. Remember, I talk about these 10 minutes on strong trending moves to these EMAs for an entry. Okay. Now it doesn't always have to be the EMAs, but it's been working really well for me. You could draw a fib, right? You could do something like this and say, oh, I'm going to enter on the 50 or the 618 or whatever. You don't always get that. Maybe there's another level that you really liked around here or something like that. But I like the EMAs. Okay. And I'm waiting for this fail because a lot of people play opening range breakouts. And if it fails originally, a lot of people just cut here, right? So I'm looking for that fail to kind of shake a few people out. I also want to see digestion of the move and a little bit of consolidation because we did just make a big move, right? To make new highs on the day. And this is where I'm getting in right around this EMAs. And I missed my ideal entry, but look, this is, a firm top watch, right? For the last couple of days because of the catalyst and everything like that and the strong moves it's making, growth sector. And man, just so simple, right? Once you're in here, you get that reconfirmation of the opening range breakout. You can trim as early as here, really. I had my levels. This was a pivot from a while ago. It's been a while since the firm's been up here, and I'm just going to keep riding it. It's got a gap to fill starting at 34.03, bear gap on the daily. And that's just simple. And then back, what do? We watch these 9 and 20 EMAs on the 10-minute. And it does lose the 9 here for just one candle and it's right back over it, rides it all the way, never even touches the 20. That is absolutely great strength. And if you look at all these pullbacks, all these red candles, lesser volume, right? Always. These are the kind of trades that will make your week, if not your month. One trade like this a month. Okay. Spot the setups that have the strength. Let them work, take patient entries. And then even more important, be patient with when you exit because a lot of people see green, they take green too early. If you're going to see green and take green immediately, you know, that's a really popular statement on FinTwit, and I don't know why, because it's bad risk to reward, right? If you're going to see green, take green, you better see red, sell red real quick, right? Because if not, your risk reward's all screwed up. You want at least 2 to 1 on your trades, if not 3 to 1. That's what I aim for. So, you know, if I'm going to let a loss go down 25, 30%, I need my average win to be 60%, you know, at least. And that's what you get when you stay in trades and you use the EMAs and you scale at targets and not your P&L, and you watch the volume to see that, yeah, that red candle might look a little scary, but it's less volume than the candle, you know, we just had. It's low volume relatively, right? Buyers are still here. Let's keep going. Let's follow the EMAs all the way up to a target. Okay. You know, when you have big gaps like this in the chart, you can scale it whole numbers. That's a big thing for me. So I'm taking profits at 32. I'm taking profits at 33, right? Just classic, right? And you can do that on any stock. You know, I do it on SPY even. All right. That's a firm. That's really it. I took a couple other little things today. I started a couple swings, but nothing like super insane to talk about. But got some good entries and things like that. CCJ is an example. This is an inside week. As much I love the inside days, obviously, I love inside weeks. Actually, you know what? Am I tripping? This isn't an inside week. No, I'm sorry. This is not an inside week. But it's a good example of waiting for the retest of the level you like. So we had this daily pivot. Now, CCJ hasn't been up in this range for a long time. So this yellow line is a daily pivot from 2011, which is wild. Anyway, it's in a strong, it goes back to really our recognizing sectors of strength. Uranium sector has been great. Look at how long we've been in an uptrend, right? Going back down to, you know, October. And a lot of respect for these EMAs. Okay. So yesterday we popped up here. We're flagging. We've been holding this pivot. Ever since we broke through and closed up over this pivot, we keep closing right at or above it. Okay. So I saw we had the pivot. We had the 9 coming up. If we get a drop down today, I want to start a short swing. And also there was some flow for 50 calls, 50 Cs, for I believe December, I think, if not January. Okay. So we got all this GEX pulling up at to 50. And this didn't have a great day, right? Not today. It's more consolidation. It's not like a firm or anything like that. But it just shows when you identify the right levels, things can just be pretty, you know, low stress, right? So right off the open, we just tank. And that's great, because as soon as we hit down here, I'm looking to buy, okay? I also saw a little 5-minute candle that I liked. Wick below, close over, right? So scooping down here for a swing starter, and they got up to about 25%, my contracts, scaled at opening price here. And it came all the way back down, but it's holding the level. Then we got another leg up. You're back to around 20% again. And then kind of the rest of the day, but I'm still holding. So, you know, I like to buy on these pulls, guys, right? To levels of support. That's kind of a theme of today too, right? Except for a firm, because it pulled, but not quite far enough. So I had to go to plan B, and I looked at the opening range, but everything else I played, ARK pulled a 45. CCJ pulled down to this pivot. Even in a hot market, and you know, there's definitely sectors that are hot right now, and SPY and Qs are coming off a really hot run, and most people, including myself, think that that's going to continue into the end of the year. We're just kind of taking a breather right now. It's still beneficial to look for pull entries. I mean, pullback entries. Breakouts are great. I love breakouts. They're fun, but the hit rate's just not as good. Your risk to reward is automatically not as good by taking a breakout. So if you can, when you're charting, when you're looking at your setups at night, say to yourself, okay, where's my ideal entry on a pullback? Mark that, set an alert, try to aim for that. If you have to, if they never give you the pullback, then you can look for that breakout, or you can look at the opening range, right? Go through your, you know, like a quarterback at the line of scrimmage, they might have a play called, the ideal play, but then they see the defense and now they got to audible out. They got to go to option 2, option 3, right? Because they have to adjust based on what the defense is giving them. And in this situation, the market is the defense. And you're not always going to get to run the play that, the ideal play that you called before, while you were in the huddle, right? Now it's game time and you got to make some adjustments on the fly. That's what the best quarterbacks do. That's what the best teams do. So we need to be them. Okay. Anyway, thanks a lot for watching. If you have any questions about anything in this video, you can leave a comment or you can find me on Twitter and send me a message and I'll help you out.